Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Wednesday, 8th day of April 2020, and this is the Daily Report for Gold and Silver. The Federal Reserve released its minutes from the emergency meetings held last month and the month prior to that as the pandemic became known across the world. We know that interest rates are near zero. We know that they have a quantitative easing program that has been reignited the first time since the financial crisis of 2008. And since April 1st, we've seen gold move up about $100 plus, and that's looking at the bottom on April 1st to current pricing, but it's gone as high as $1,742 per ounce. That as recently as yesterday to a couple of days ago. What that tells me is this market could swing either way. Long term, I'm extremely bullish on gold as a whole because the government's going to have to dig itself out of all of the financial responsibilities it's put in terms of obligations. So will the Fed. To that end, I do believe we'll see gold long-term go higher, but short-term it could move either way. Let's take a look at our current price board and then to our technical studies. Traders, today gold did decline down 420 at 1679.50. We did raise our stop yesterday to 68, and if we look at today's low, that came in roughly at 1670.70. So we are not stopped out. If it does get hit, it will get us out with a $6,600 per contract profit, which I'm very pleased about. And I also think with tomorrow's estimates of jobs, we could easily see the market spike higher. Over into spot gold, that is at 1644.80, so the spread is narrowing down about $1.28. We had mixed precious metals with platinum trading lower on the day, down $11.70 at 733.30. Palladium trading up about 1/3%, a $6 plus gain at 2100, and silver losing about 1 3/4%, down 27 cents at 1520. That being said, the dollar was stronger today, up 31 points, and we did see a continuation of the rallies that we have seen with the Nasdaq going over 8,000 for the first time, I believe, since March 10th, and the industrial average moving up to over 23,000, the first time since March 13th. Bitcoin in quiet activity is sitting at 73.50, up $20 on the day. Traders, there is no doubt, but this market has seen some extreme volatility. We're looking at a weekly chart, and as of today, Wednesday, we still are exhibiting nice gains on the week, although they're well below that real brief high that hit at 1742. Yesterday's candle, but that occurred after New York had closed in overseas trading. We have converted the weekly into a daily chart, and when we look at our daily chart, what strikes out at me most is that even though today we did have a market scenario in which we had a higher close compared to the open, when we compare it to yesterday's candlestick close, that's down about $4.20. So in essence, when we look at any kind of a candlestick pattern, what we are seeing is a morning star, but that is occurring after a defined move to the upside, which is not where you would look for that type of formation. That tells me that, quite frankly, the market could go either way. It could move higher from here. It could move lower from here. And as we said on our opening statement, we have a stop protecting us and locking in about $6,600 per COMEX contract if, in fact, we get stopped out. But we are currently about $10 plus away from our stop being hit. We currently show support just below current pricing, coming in at approximately 1675.50. That's the Fibonacci retracement, the 23% retracement point. We see resistance coming in just at 1700 and above, about 1705. 1742 is the next level, and then beyond that is $1,800 per ounce. Those are the three levels in terms of upward resistance. We have just opened up in the afternoon trading session with a little bit more pressure. Current pricing is 1678.40, and my recommendation is to maintain your current long position at 1602. Maintain your current stop at 1668. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.